When you talk about flows between China and ASEAN, what's driving that, and how are you participating in that?
If you look at Asia, Asia is now trading more with Asia. So that's what we call the intra-Asia trade, right? So intra-Asia trade is more than 50%. And of course, ASEAN is China's greatest trade partner, and vice versa.
Okay.
So the trade has been becoming a lot more important. And I think when we talk about why investments, because a big multinational companies, Chinese companies, they have for the last few years also adopt what we call China Plus One strategy. So other than manufacturing in China, they are setting up shops in the ASEAN.
Inflation and higher interest rates is generally a good thing for banks because it helps to boost your net interest margins. Is that true? And is it helping?
It is true. I think big banks like us that have a lot of deposits and a big balance sheet, that's what's impacted by the low interest rate environment. So if you look at interest rate rising up this year, for our first quarter results, we actually already seen some of the loans are repriced, and our net interest margin actually rose by 3 basis points for the first quarter. And so that would be such a trend. But I think if inflation hit too fast or interest rates rise too fast, there's also impact on business. So, for example, it can deter your wish to actually buy a bigger place and do a big mortgage, right? Because you're thinking that, oh, my mortgage payments will be rising.
Okay.
So it cuts into the business both ways.
One difference, I guess, with OCBC compared to your peers, you have a big insurance group within the group. Can you talk about the thinking behind that and how you leverage that platform with the rest of the group?
Insurance business is a very old business, and we're very big in Singapore and Malaysia, which gels, rightly with what we're doing in banking and wealth management as well. We see Great Eastern as part of us. We're in the same group, and in a way, the way we work together, it's more than just like a buy and sell, right? I put your products on my bank assurance platform. It's more than that, because we can together, actually because we are a group, we can together actually innovate on new products, both the insurance and the banking side. We have a rich data. This data actually allows us to do a lot of analytics about what our clients need. And of course, the data is anonymized. So we don't share customer information, but we can share insight. So that insight would allow both to then come up with better products for our customers.
Are you concerned about the possibility of more competition and a different kind of competition, really, from these players?
If you look at the banks have also put a lot of investments into digital. So it started years back. So in a way, and how I see these competitors is, we at least to be equally good in reaching out to our customers, provides the same service, if not better. Today, actually, I think a lot of our customers actually bank with your mobile phone.
Yes.
Right? Or your online banking.
Yes.
And but we still have the branches.
Yes.
So if you need a longer advisory session, you may then set up a time with your RM and you go to a branch, or you come to the center to talk to our people. But you are equally equipped with our products. You can actually buy foreign exchange, buy unit trusts, buy insurance actually online.
Right.
And that becomes actually a lot more effective as well. And you think about a bank like us with a group, as I said, insurance group, we have a lot of data. We will be able to help you to plan much more than just handling your payment or a loan or a simple investment. So I think banks still have quite a big advantage, but we have to face the competition seriously. But having said all that, it also does not stop us in working with them.
Do you see ESG as a growth opportunity for OCBC, or is it really a case of adapting to a new norm, as it were?
I told my team that this is non-negotiable. This has to happen, meaning we need to protect our environment. And this come up with then a lot of opportunities. How do we help our customers also to reduce carbon emission, to transition from what we call brown into green in a way. Mm-hmm. So back in 2019, we were very committed that we will not finance thermal coal mines and also coal-fired power plants. Right. So that is consistent. We continue to make good disclosure what we're doing. We have built our capabilities in sustainable financing. And we have a strong team, and we are leading in this field in this part of the world. We have set up targets that we want to put sustainable financing firmly on our books. We have actually revised a target to say we want 25 billion Sing dollars on our book by 2025. We passed that last year already.
Okay.
So 4 years in advance, we passed that.
Is there a new target now?
Yeah, we have a new target. It is 50 billion.
Okay.
I'm very confident we will reach it. Mm-hmm. I think as at end of March, the loan sit on our book is about 8% of our total portfolio. I think it's higher than a lot of our peers.
Okay. Wow. What are your main strategic initiatives and direction going forward?
What are the growth potential for the next 2 to 3 years? I mentioned we have a refreshed corporate strategy. Mm-hmm. There are 4 pillars. First one is indeed investment and trade flows between Greater China and ASEAN. Okay. The second one is wealth management business in Asia. These are 2 very important pillars. And the other 2 growth pillars is new economy, fast growth industry. For example, agri-tech. I think that is very important, and particularly if Singapore is to deliver 30 by 30, right? Likewise, I talk about sustainable financing.
Okay.
And in sustainable investment as well. That's the 4th piece. So I do see that if we put our acts together really well, I am looking at growing in the next 2 to 3 years a CAGR of 10% a year.